Hey guys, Simulate and Trade here. I want to thank all of you who watched yesterday's video. We covered a ton of information and you should be pretty up to date on everything happening. Essentially, S&P earning yield data shows that we are quite literally on the verge of a recession. I believe we have passed the event horizon, our point of no return. This conclusion is derived from various gears in the overall machine that is the economy showing signs that they are about to break. We briefly talked about rehypothecation problems that come from all the naked short printing that is happening. We talked about why the repo market is about to bust. And we talked about the crypto crash, and how much of that can be attributed to hedge funds and institutions literally withdrawing their ownership in order to have enough cash around for new DTCC requirements, among other things. It was so funny because the crypto community often mocks and belittles the ape community, calling us a bunch of tinfoil hat conspiracy theory pumpers who have nothing to do but stretch things out to be something other than what they are. Yesterday on the biggest cryptocurrency thread, people started complaining and speculating that hedge funds might indeed be playing and manipulating cryptos in order to delay their own end. Funny how we have been saying this, but it is only now that they are affected directly that they are beginning to put two and two together and come out with the exact same conclusion we did. What's even more ironic is that they think of crypto as this superior and supreme currency that is beyond market crashes or manipulation. The currency that literally has no rules, no safeguard, no restrictions will somehow save them from market makers who are also taking great interest in them. That to me is funny. I love crypto, I love me Ethereum, but to think that hedge funds will change their business model just because crypto is a bit different is ridiculous. They will abuse, manipulate it as much as they can, possibly more than the stock market eventually unless regulations are implemented, in order to make a buck. The idea behind any trade is to transfer wealth from others to your own pocket. I really don't get why some crypto owners struggle with this, but I am happy to see they are finally seeing the light and understanding that there is no safe security. There is nothing safe about the stock market so long as hedge funds are involved. I've derailed a bit from where we were. So, the crash of crypto was another clue pointing to things about to come. And lastly, we talked a bit about how commercial mortgage-backed security delinquencies are starting to mount up. Whole markets failing at every level, and they are going to be left holding the bag, so buy GME and AMC and hold. What I want to address from all of this is the most common question of all: how did we get here? I will give you the answer to this and you will know exactly how it is that everything changed. It will take a couple of minutes, so if you aren't interested in all of this, feel free to skip ahead to the next portion of the video where we talk about technical analysis and what to expect tomorrow. If you, however, want the forbidden fruit from the tree of knowledge, relax and sit back and get ready to reach new levels of disappointment. I want to credit Autobit, who penned one of the most fascinating and forward-thinking explanations of all of this. The following explanation can be much contributed to his own work, and I am just building from it. We know about the DTCC, or the Depository Trust and Clearing Corporation. This corporation is compartmentalized into various mini-sets, each with a different set of responsibilities, goals and duties. For sake of keeping an already complicated story short and concise, we will focus on only one of the subsidiaries of the DTCC, the DTC, or the Depository Trust Company, which is the clearing agency. In the 1980s, the DTC started using virtual internet platforms for underwritings. This allowed for less human errors and a more efficient process. But this also gave birth to a problem that has plagued stock markets: naked shorting. This was a contributing factor in the 1987 stock market crash. The growing divergence between the price of a stock and their derivative is credited as being patient zero in that market crash. In simple words, there is a growing disconnect between the value that a stock should have and the actual value it is manipulated to have. This problem originates from the given ability for market makers to devalue or overvalue stocks using high-frequency machines that manipulate prices through order flows. The problem was relatively controlled until the 2000s. This is when things start getting wild, so get ready. The DTC apparently received a ton of orders from issuers to start pulling securities. Issuers are entities that issue stocks. They started receiving orders from issuers to pull big amounts of their stocks. Why, you might ask? Because these issuers realized in 2003 the very same thing apes realized in 2020. That the DTC was allowing their shares to be taken advantage by allowing their very own securities to be used to short the stock. Imagine you lend your friend a car, who he then tries to dirty and scratch in order to lower the value of it, so that his own car has more value than yours and he can win more money or get more girls in it. So upon request from the issuers to be returned their shares, their own investment, do you want to know what the DTCC did? They denied their request. They refused to return back the owner's real shares because they were being exorcised by the parasites in Wall Street. I mean, talk about corruption at face value. This is beyond disgusting at this point. We apes didn't discover jack nothing. We didn't discover fire. We simply came to the same realization issuers already did over a decade ago. That the shares that you own are lent out to hedge funds and other financial institutions only to be shorted to drop the price. As much as the DTCC is orchestrating the fall of hedge funds, they are not a reliable source. They are the gatekeepers of market manipulation, and they have been the force allowing them to abuse, manipulate and et against you in America every single time. It is only now that they realized that GME and AMC can only blow up that they are betting against hedge funds and passing proposals to blueprint their downfall so that they themselves aren't buried under when things hit the fan. A good point that keeps being brought up is the lack of physical stock shares. The very existence and presence of real shares would make it extremely difficult for hedge funds to manipulate. So what do you do about this? Easy. You buy and hold GME and AMC. As explained so many times, they serve as perfect hedge plays against a crumbling market and are pretty safe because they are bound to moon to historic proportions. The geniuses over at crypto, the ones that are obsessed with it, are now realizing that they too are getting abused and bullied, something that we have been preaching for months now. Welcome to Club, dummy. Crypto has many great and unique qualities, but it is not exempt from market manipulation by the evil doers of the world. I said it yesterday and I will say it again. Hedge funds have bet and will bet against you in America every single time. They used tax-funded pandemic relief money that was granted for purposes of helping boost a fallen economy, and instead they bet against you. Against your job, against your family, against your future. They shorted stocks and companies and displaced God knows how many thousands and millions of workers. They, parasites that they are, helped the process of decaying America in order to force the government to provide more economic boosts so that they can short even more. They have taken a concept of crypto that was meant to decentralize money and have instead now slowly gotten their hands so far into it they now pump and dip it to abuse investor money. They implement bots on social media to pump and dump crypto because it is their right to do so. It is their right, since the government has seen and done nothing, to collapse everything they touch. Buy and hold GME and AMC. It is quite literally the trench line they cannot cross. Buy and hold. Today's price action for AMC and GME was something to behold. I mean, it was just incredible to see these two stocks rise. AMC began pre-market bullishly, running sideways and build a strong base of consolidation. Because the German stock market was closed due to a Christian holiday, we didn't get the same typical volume we are used to. It was upon market opening, however, that AMC chose violence. Before the clock hit 12 p.m., AMC had risen to 13.96. It retraced back down to 13.33 before running up again, reaching 13.88 this time. The last hour of trading was glorious to see, because we saw GME testing that 13.88 with all intent to destroy that wall and run past $14, but it was shorted and dropped, closing at 13.68. Listen, I'm going to be honest with you. Today's run was absolutely magnificent, and looking how far above the BWAP we are, I without a doubt bet that tomorrow pre-market we trade above 13.80, with chances of reaching 14 before market opens are most likely unless we get more unprecedented manipulation. The stock has far too much momentum and strength at the moment. We built a ton of support at 13.60 and have more support at 13.34. Resistance, we barely have any. That 13.96 is the biggest one right now, and I think we break that on a small volume surge. Amazing run today. I remain incredibly bullish for tomorrow. 60% of the volume today was through dark pools, indicating to me that this run was nothing but held back. Had it not been for them, AMC would have run above $15 easy. Even through endless printing, they cannot contain a regular green day's worth of growth. I saw some fear articles from the press belittling AMC, which is a buy signal for all apes. Buy ASAP and hold till we rocket off this planet. GameStop. Oh, GameStop, you Chad. Great pre-market, even better than AMC because it did run a little higher. Much like AMC actually, upon market open, the stock ran and reached a high of day at 188.46 before 12 p.m. The stock then traded sideways, consolidating a lot around 186. The stock attempted to break resistance walls but was constantly being shut down. Around 2 p.m., The stock was victim to pure nonsensical manipulation attacks, vertically dipping it down to 176. The momentum brought the stock back up and closed it at 180.01. I still feel the stock is still heavily undervalued, and tomorrow pre-market we should trade in a range between 180 and 182, though I think we easily break this resistance and could trade higher. 48% of the stock volume came from dark pools, and order flow indicates that almost twice as many people bought GME than sold. These two stocks will run again tomorrow, or should run unless they are heavily attacked or the entire stock market crashes again, which hedge funds will use to overly abuse it. I remain super bullish into tomorrow, and so should you. Buy and hold. Let me know in the comments, what worries you or troubles you the most about all of this situation. I'm curious as to the concerns of my audience, and it might give me ideas of what to prioritize and focus on future videos. Please drop a like on this video, and thank you for making it to the end here with me. I want to extend my utmost gratitude to all the people that joined my Patreon. I am humbled by the 17 people that have decided to help me grow this channel to be something more. You guys are the absolute best. Make sure to subscribe for more if you are new, and I hope to see you on the next one.